Right now, global tensions, fears of war, and concerns about slowing U.S. economic growth are shaking the markets. And if you're feeling nervous about your money, you're not alone. But here's the truth. Uncertainty doesn't destroy wealth. Bad decisions do. So today, I'm going to break down exactly what financial advisors are recommending right now and how you can protect your money, step by step. Section 1. Reevaluate your financial timeline. First, take a deep breath and review your timeline. Ask yourself, when do I actually need this money? Because your strategy should always depend on your timing. If your goal is 10, 15, or 20 years away, short-term market drops don't matter as much. But if you need that money in the next 1 to 2 years, that's a completely different situation. In uncertain times, clarity beats panic. Section 2. Check your stock exposure. Next, take a close look at how much of your money is in stocks. Stocks can grow your wealth, but they also come with risk, especially during volatile periods. You don't want to be overexposed, meaning too much of your money riding on market swings. A simple rule: if the thought of the market dropping 20% makes you uncomfortable, you might be taking on too much risk. Section 3. Consider safer investments. Now, let's talk about safety. Many advisors are recommending short-term U.S. Treasury bills and certain ETFs. Why? Because they're considered some of the safest places to park your money, and Treasury bills even come with tax advantages at the state and local level. Think of these as your financial safe zone, especially when the market feels unpredictable. Section 4. Don't panic sell stocks. Here's where many people make a big mistake. They panic and sell everything. Don't do that. Markets go up and markets go down. That's normal. Instead, follow this simple rule. Don't keep money in stocks that you'll need in the next 2 years. This way, you avoid being forced to sell at a loss. Section 5. Build a cash safety net. Finally, make sure you have accessible cash. If something unexpected happens, you don't want to touch your investments. That's why financial advisors recommend high-yield savings accounts. They give you easy access to your money, better interest than regular savings, and peace of mind. Think of this as your financial backup plan, your safety cushion in uncertain times. At the end of the day, you can't control the economy. You can't control global events, but you can control your strategy. Stay calm, stay prepared, and make smart decisions. Because in times like these, the people who win aren't the ones who panic, they're the ones who plan. Call to action. If you found this helpful, make sure to like the video and subscribe for more smart money strategies. And tell me in the comments, are you changing your investment strategy in 2026 or staying the course?